Hey guys, and welcome back to yet another video on my Hargreaves Lansdown Stocks and Shares ISA portfolio, where effectively I just talk you through my view on markets, my view on the funds I hold, and we basically go from there. So for those of you that don't know me, I'm Jack. I work for a wealth management company, and I'm a CFA charter holder to Green Finance. So I like to think that I know what I'm talking about when it comes to markets. I basically give my views, and yeah, we basically take it from there. So without further ado, I'll jump straight into the Excel dashboard.
Before we get into that, just need to remind everyone that this is not financial advice. This video is for education and entertainment purposes only. So yeah, with that said, let's come on to the Excel dashboard.
Okay, here we are, Excel dashboard. Starting at the bottom. There isn't too much to update you on this time actually. It's 5 days until I get paid, so no further contributions until, well, the 7th or the 8th of August. And I'm actually going on holiday in August to Ibiza, of all places. So I'm not sure how much I'll be able to save straight off the bat. So we'll leave that there. Yeah, no further buys or sells, no changes to the actual portfolio itself. You can see there's been a slight gain over the last couple of weeks. Markets have continued some crazy momentum. It's actually been crazy. And the US dollar has fallen away over the last couple of weeks. For those of you that have been watching a couple of these series, a couple of these episodes, you'll know that I've been talking about the US dollar having a little bit of a bounce back, which would be nice for my portfolio, which has happened. So yeah, that's good. Healthcare, I think, has been the biggest detractor by far, and I'm going to talk about that when we come onto the next screen, and basically what's gone on there. It's been pretty painful, but you can see the general trajectory of the portfolio and the assets is in the right direction. Just quickly talking over my portfolio once again. The whole idea is there's three of the six funds are more defensively minded. 3 of them are more aggressive and sort of cyclical. So you've got insurance, Fidelity Special Situations, which is UK equity, and then you've got health and pharma, which are supposed to be the sort of more defensive, steady components. And then you've got the more aggressive components in tech, smaller companies, and BlackRock Global Equity Unconstrained, which is basically like a best ideas BlackRock Global Equity Fund, quite concentrated. Polar Capital Global Insurance is my largest holding. That's effectively a play on higher rates. Insurance is pretty uncorrelated to the business cycle, so if we do get a big downturn, that should be quite resilient. And also they're quite, they've got a sort of decent runway over the next sort of 3 to 5 years with the rate story. They benefit greatly off of investment grade bonds being where they are, which is sort of like 5-6% yield, where they've been at about 2% for the last decade or so. So anyway, that's that. You can see, yeah, slight uptick. We're very, very close these days to the black gain bar being on top of the contributions bar, which will be nice and how I intended it to look from the start. That said, with markets where they are, I wouldn't be surprised to see a reasonably sized downturn in the coming future. And it's sort of what I'm preparing for, if you like. So that's why a lot of my money more recently, if you've seen the other videos, has been bought into the more defensive sectors as opposed to the more aggressive sectors, let's say, of tech and smaller companies and stuff like that. But yeah, that's the dashboard. Not much to update you on until I get paid, and you know, whether or not I contribute is a different story, but we'll go from there next time. So just diving into that healthcare story a little bit more, I've got 2 quite large components of that healthcare index up on the screen at the moment. One of which is United Healthcare, United Health Group. So their CEO, I'm pretty sure, was the one that was killed by that guy, sort of at the start of the year-ish. But this earnings sort of miss and the recent sell-off hasn't really been anything to do with that as far as I'm aware. It's just, I don't know, a short-term sort of blip, and then the sentiment's gone a bit crazy in healthcare recently. But you can see, look at the sort of steady increase of that line. And then again, it's quite ironic. I start the series of this channel about there, and then we get this, which is what is that? 51%, which is great. But again, I think you're sitting there at a 10.3 times PE ratio, 4% dividend yield on a company in the healthcare sector, which firstly has always been a historic, strong return asset where area to be invested, let's say. And you've also got that structural tailwind of the population getting more unhealthy, getting older, especially in the West. So I'm actually more than happy at this stage with my allocation as it is now, and if anything, I'll just be adding to these allocations. Then the other one is Novo Nordisk, which is one of the, well, but sort of was one of the major players in the whole weight loss drug story. So you've got Eli Lilly, which is the other main competitor for Novo Nordisk, which has performed much better. Again, you see that very strong return profile. If you open up Novo Nordisk, again, you see that very strong return profile over the long term. It's actually in its biggest downturn, peak to trough, I think on record, or maybe there's one other. So on TradingView, my charting software, you can basically run charts back however long you want. And I think there's one maybe in like the early 2000s where it's a similar sort of 70-ish% level. But yeah, from peak to trough, we are down 66. And, you know, I think probably at this top here, late 2024, that was a bit bubbly. That was a bit toppy. You know, that's somewhat unreasonable. But where we are now, I mean, I was buying into this 40% ago, so it's been pretty rough. But 13 times PE ratio, 3.5% dividend yield, dividend growing. They're still in a market that's going to grow at 15% plus per year. I think their profit outlook now is about 10-ish% operating profit growth next year, and I would say that's probably reasonable to expect going forward. I think, you know, they've recently cleared house. So normally they've had a new CEO come in, and normally when you get a new CEO come in, they come in and clear house, which basically means dump all of the bad news, like blame it all on the other guy, and then from there they've got a base to build off. So I'm sort of hoping that that's what's happening here. Finally then, just to run through some charts on the broader portfolio. Again, this has only been in existence since this sort of area here. Awful timing, as I've covered off before. But over the long term, you know, I should expect, being all in equities with pretty decent growth stories, this performance should be relatively strong. So here you've got the big Trump tariff sell-off. You've recently had a pretty significant rebound. And if you look at the S&P 500, for example, the line will be actually above the pre-tariff level. It's been a crazy rebound in markets. The sentiment has gone pretty mental. There's a lot of optimism, a lot of froth. You'll see crypto popping off. You see, you know, stuff like Palantir and all the sort of meme stocks. You saw, I mentioned it in my last video, American Eagles with their Sydney Sweeney rally. Effectively, it's very, in my opinion, it's very 2021-esque sort of thing. You know, where you did have that blow off top, and basically everyone got a bit ahead of themselves. Maybe that can continue. You know, maybe I'm just wrong. Maybe I'm just a boomer. But I think it makes more sense to be cautious as opposed to aggressive in deploying money at this moment in time. So yeah, that's that. If you want a deeper dive on any of the funds, just check out the rest of my channel. This one's sort of just a brief update more than anything. So yeah, thanks again for all the support on the recent videos. Lots of new viewers, lots of new subscribers. Thank you for the likes, thank you for the comments, and hopefully see you in the next one.